looking at the dollar being at a two-decade high, but here in Asia, we're not feeling the pressure as much. And I was just looking at some data in terms of developing countries, the kind of external debt position that they're sitting on. And it's interesting, if you look at some of the numbers out there, it's telling of how indebted this part of the world is in dollar-denominated debt and dollar-denominated loans. When would it actually prick the system here in Asia in response to a rising dollar? Because at some point in time, those scheduled repayments, given the slack in recovery, would be a problem, would lead to defaults.
Yes. So this is actually a very good point that you raised. If you look at the FX reserve to FX debt coverage metric across Asia, I think a few economies are seeing this metric slipping quite a bit to, I think, multi-year lows in the case of Indonesia as well as in the case of Philippines, given that they have quite a lot of foreign currency debt. But the point to make is that with growth being if growth continues holds up in this part of the world, and we will likely continue to see foreign interest in terms of investment and FDI coming into this economy. So that's likely to some extent providing some degree of assurance on the point of foreign debt investors. But on the other hand, it's important for some of the central banks in this region to continue to maintain relatively appropriate policy settings to prevent current account deficits from widening. So that will, to some extent, alleviate some of the concerns with regards to their foreign debt burden. The good news is that in the case of Indonesia, the short-term reserve to debt coverage is actually quite manageable. So it's more or less a concern over how the long-term debt could become an issue in the years ahead.
Really quickly, Wei Liang, speaking of appropriate policy settings, the yen hitting that 144 handle, we got that Q2 GDP data coming through, but the softening when it comes to the current account surplus, where is the yen going to stop?
Yeah, that's a tough one. So initially, we were thinking the yen could be strengthening given potential policy pivot from the Fed. But from what Powell has said in Jackson Hole, I think that policy pivot is going to be some time further away. So what that means is that USD is going to be a lot firmer than what we've initially projected, and that's likely to drive dollar yen higher towards 145. And probably it's going to stay around these elevated levels. But at the same time, it's important to stress that the yen is now at record low valuations, right? So if and when the Fed decides to reduce its pace of monetary policy tightening, then we could see a very sharp rally coming through the yen. But right now, as you mentioned, sentiment towards the yen is still going to be quite negative given this policy divergence and widening yield differentials between Japanese bonds and US treasuries.